Hey crypto friends, this is going to be video number 10 out of 17 of my Crypto Trading for Beginners series, and today I will be showing you guys how to use the top 5 basic trading indicators that are used by millions of other traders across the world and how to use them to the best of your advantage. But before we actually go ahead and dive into the video, for those of you who are looking for a solid exchange to trade crypto futures on and would like to try out the same exchange that I use on a daily basis, feel free to go ahead and try out the Blowfin exchange here, and you can find a link to it in the description below this video. All right, everyone. So, once you've learned how to read naked charts from the previous video that I had, or that I had out yesterday, and you understand price action a little bit more, the next step is for you to add a few trading indicators to your toolbox. However, it is extremely important to know that indicators do not predict the future or anything like that. Hang on, I got something in my eye. Ugh. They do not predict the future or anything like that, all right? But they can help you to be able to do things like confirm trends, confirm momentum, and make better decisions overall, and helping you form your overall bias on where you on how you should be, trading. So in this specific video, we are going to cover 5 of the most common trading indicators used in crypto trading, such as the RSI, EMAs, MACD, Bollinger Bands, and volume. All right. So the first indicator that we're going to talk about here is going to be the RSI, and you can clearly see that I've got it open right in here. It is basically, RSI is short for Relative Strength Index, which is basically a momentum indicator that measures whether an asset is overbought or oversold on a scale of 0 to 100. And you can see that scale of 0 to 100 from right down in here. All right, you can see it in the numbers down here. All right. So when the RSI is above the 70 level, which is this top dashed line right in here, when it's above the 70 level, it's considered overbought and the price might be cooling off soon and dropping. All right. And when the RSI is below the 30 level, which is the bottom dashed line right here, it means that the price is oversold and the price might bounce or end up rising soon. Now, the best way to use the RSI is to check if the market is stretched way too far in one direction. And if it is, a reversal may be happening soon in the opposite direction. However, something to keep in mind with using the RSI is that coins can stay overbought or oversold for extended periods of time. As you guys can clearly see right here, this coin has been right back in this area. This coin was overbought for, let's see here, from September 6th all the way until September 10th. So this coin stayed in way overbought territory for about 4 days straight before it actually started to come down. All right. So you need to keep that in mind when you are trading and using the RSI indicator. All right. So outside of that, and this is also why you can't be using just one single indicator either, to base your trading decisions off of. Okay. You want to also base it off of price action, like I was talking about in yesterday's video. All right. So now that we've got the RSI out of the way, it's pretty simple. It's a very basic indicator that a lot of people use. Now that we've got the RSI out of the way, we'll go ahead and move to the EMAs. Now, the most common EMAs are going to be the 20 EMA, the 50 EMA, the 100 EMA, and the 200 EMA. I use the 7 EMA and only the 7 EMA with my personal trading, but that's the way that I trade. That's not how most people trade, okay? So I will go ahead and close out my 7-period EMA, and we will go ahead and turn on the other EMAs. So EMA, we'll type in EMA and look for what we're looking for. So this one right here is built by somebody else, Dr. Sweets, and it includes the 20 EMA, the 50 EMA, the 100 EMA, and the 200 EMA. So we will go ahead and choose that one. And as you guys can clearly see, we've got our EMAs added to our chart right here, okay? So with the EMAs, they are basically a trend indicator, and you can also use them as dynamic support and resistance as well, all right? And I'm sure that you've seen me personally use these in a lot of my videos in the past as well, because I used to use all of these EMAs too, all right? But I don't use all of them anymore, okay? But now, how these work is pretty simple, all right? It's pretty simple since they're basically just a trend indicator. Basically, if the price is above the EMAs, then you're in an uptrend, as you guys can clearly see right in here, all right? And if the price is below the EMAs, then the then you're obviously in a downtrend. And as far as support and resistance is concerned, prices love to bounce and reject off of these EMAs very, very often. All right, so you can also be using them as a dynamic support and resistance as well. So as you guys can clearly see here, price ended up coming down here on this 4-hour chart, and it did not quite go down to the 50-period EMA. Instead, it went almost down to it, but not quite. So that's technically a bounce off of this 50-period EMA, and we ended up going back upwards. Now, we ended up coming back down, and we came down to the 50-period EMA, and we kind of found support right at this level, as you guys can clearly see right in here, and eventually we ended up bouncing off of that 50-period EMA and going even higher, which is where price action currently is right now at the time of me filming this video. All right, so that's just going to show you how you can use these EMAs as a level of dynamic support and resistance as well. All right, so that's pretty much all there is to the EMAs. They're very, very simple to use. They're very basic to use. Let me go ahead and show you how I use my EMA. I like using the 7-period EMA simply because it's a very fast moving average, and I like to, with my entries and exits, I like to be able to get in and out very, very quickly. So when I'm sitting here trading this, you can still see that the uptrends are above the moving average and the downtrends are still below the moving average. All right, so typically what I like to do is, since I'm longing and shorting the market all day long, typically what I do is I'm waiting for crosses of these moving average, or of this moving average right here. Once we end up crossing below that moving average and we've just got done with a strong uptrend or a strong downtrend, and it crosses above or below this moving average, that tells me that we're about to move in that direction and start trending upwards or start trending downwards. And that's the reason why I personally love to use these shorter period moving averages like the 7-period EMA. All right, so now that we've got the EMAs out of the way, we will go ahead and move to the MACD indicator, which is a very good confirmation indicator that I personally like to use from time to time. I typically only tend to use it when, when I'm kind of unsure or I'm not 100% confident in a trading setup. But let's go ahead and show you the MACD. So we will go to MACD, and it stands for Moving Average Convergence Divergence. And there we go. We've got our MACD indicator at the bottom here. All right. Now, this indicator shows both trend direction and momentum as well. And it's basically made up of 2 moving averages and a histogram that shows trend direction and momentum strength as well. So basically, if the MACD line crosses above the signal line, which is these 2 lines right here, if the MACD crosses above the signal line, it's considered bullish. All right. And when the MACD line crosses below the signal line, it's considered bearish, okay? And then the histogram bars that you can clearly see right in here, these are the histogram bars, the dark green, the light green, the dark red, and the light red, or pink, whatever color you've got that as on your computer. These histogram bars show how strong the trend is by the size of the bars, coupled with the colors of the bars as well. All right, the dark green bars equals strong momentum, and the light green bars means momentum is dropping. All right, as you guys can clearly see that right in here. We ended up peaking right at this candle right in here, and then momentum started to drop, and you can see that right in the histogram right in here, and the bars started to get smaller and the colors got lighter as well. And we started to make a cross on the MACD line and the signal line up here as well. And once we had that cross, boom, we ended up turning into red, and that tells us, boom, we are turning into major bearish territory, and we are dropping, and that's exactly what happened. All right, so again, this is just another good solid indicator for you to use in your toolbox whenever you want it. All right, so now that we've got the MACD out of the way, we will go ahead and move on to the Bollinger Bands indicator. So we'll go to Bollinger Bands, and there they are right there, and we will click them. Now, I hate these colors that they've got I don't know why they've got 3 different colors on here. That just bothers my eyes so much. So let me go ahead and turn off my moving average here, and let me go ahead and change these colors here real quick to some colors that are more friendly to my eyeballs. So we'll go ahead and change the main moving average in the center to pink. And we will go ahead and change the upper line to a nice blue, and we will change the lower line to a nice blue, to the same blue. All right. So there we go. That's a little easier on my eyes. It's only 2 colors rather than 3. But Bollinger Bands, they are technically a volatility indicator that consists of 3 lines that you can see. All right, we've got a middle line, which is my pink line here, which is a 20-period moving average. Pretty sure it's a 20-period moving average. Yeah, it's a 20. It's a 20-period moving average. And then we've got our upper band right up here, and then we have got the lower band down here as well. And the upper band and lower bands, they expand and they contract based on volatility. All right. And the best way to understand how it all works is when price touches the upper band. So right in here, when price touches the upper band, it basically tells you that the asset may be overbought. And when the price touches the lower band right here, it tells you that the asset may be oversold. All right. But then we also have squeezes as well. And this is when the bands squeeze together, as you can see right in here. All right. We've got a squeeze right there. Now, when this happens, when the bands squeeze together, this usually leads to a bigger breakout in either to the upside or the downside. All right, in this case, we had a squeeze right here, and momentum started to build once again, and boom, we ended up going to the upside and breaking out to the upside. So that is another way that you can use the Bollinger Bands. Now, you can also use the upper band and lower band as support and resistance as well. But something to keep in mind here, just like the RSI, prices can stay overbought or oversold for extended periods of time. So it's best to use this indicator with price action as well, or with other indicators too. All right. So guys, now that we've got the Bollinger Bands indicator out of the way, we will go ahead and move on to the last indicator that I'm going to be showing you guys here, which is going to be just the basic volume indicator, which is honestly something that a lot of people refuse to use or don't use at all. So let me go ahead and change these colors here just to match my chart that I've got here. Let me go ahead and change that to green for bullish, and we'll go ahead and change it to white for bearish. Now, a lot of you are probably asking, why do I use green and white? Well, the simple answer is it's just easier on my eyes personally, and you can change yours to whatever hell color you guys want as well. I just like green and white, green for uptrends, white for downtrends. It's just much easier on my eyes. So this is the volume indicator right down in here. All right. Now this indicator is great for confirmation because it shows how many coins are being traded over a given time and is one of the most important but often overlooked indicators. All right. It simply works by looking at the volume bars themselves, these bars right in here. High volume on a breakout equals, a stronger, more reliable move. And then when you have low volume on a breakout, it typically equals a weaker move that is more likely to fail. All right. And rising prices with falling volume can also indicate that a trend might be losing its strength as well. So overall here, guys, it is a very super simple indicator to use, and there's really not much to it. Okay. So as you guys can clearly see right here, volume was going upwards right in here, but then it started to wean off, and that's when you can tell, when you start to see these bars starting to wean off and get smaller and smaller and smaller, that tells you that we have probably got a downtrend coming, and you should probably start thinking about either getting out of your position if you're in the spot market, or start looking for a short opportunity to bet on the market dropping. All right. Now, guys, here's the thing. Now that you guys know a little bit more about some of the most common trading indicators, now you guys can go ahead and combine them with all of the good price action stuff that I talked about in the previous video. However, just remember, one thing you guys need to remember is no single trading indicator is ever perfect or guaranteed, and these indicators should not ever be used by themselves to trade the market either. All right. Instead, you simply want to use them as tools at your disposal to support your overall decision making instead. All right. So basically learn each of these indicators one at a time, practice them on a demo account or with small positions in the live market as well, and focus on combining them with raw price action on the charts, and you guys will eventually start to grow your skills or see your skills grow and be that much closer to finding your personal edge in the crypto market as a new trader. So guys, now in the next part of this 17 video beginner series, I will be talking about all of the different trading timeframes and how you guys can choose a time frame to trade on that works best for your personality and your personal time available to trade on any given day. All right. So before I go ahead and wrap up this video, if you guys are serious about learning and you'd like to learn more and you haven't already joined, then I would like to go ahead and invite you to join my premium crypto trading education Discord server, where you can do things like ask me questions. You can get one-on-one help whenever you want it. You can see how I personally trade in real time, and you can get even more in-depth knowledge on trading in general. And you can find the link to join that server in the description below this video. Now, outside of that though, guys, if you guys enjoyed this video and you feel like you got some pretty decent value out of it, please be sure to go ahead and subscribe to the channel. Hit the like button below the video to help me out. And with that said, for those of you guys who stuck around and watched this video throughout the whole thing, I appreciate all of you, and I hope to see you all in my future videos.